Many people believe you need thousands of dollars to start investing, but the truth is, you can begin your investment journey with as little as $100. Starting small allows you to learn the ropes without risking too much. It's about building habits, understanding how markets work, and seeing your money grow over time. Even a modest amount can make a difference if you're consistent and patient. In this video, we'll walk you through practical steps to get started, what options are available, and how to make the most of your first $100 investment. Let's break down the process together. Before you invest a single dollar, it's important to define your goals. Are you saving for a big purchase, building an emergency fund, or planning for retirement? Knowing your purpose helps you choose the right investment strategy. With $100, your focus should be on learning and growing, not chasing quick profits. Write down your goals and keep them realistic. This clarity will guide your decisions and keep you motivated, especially when the market gets unpredictable. Remember, every investor's journey is unique, and your goals will shape your path. Investing always involves some level of risk. With $100, you can afford to take small risks and learn from them. It's crucial to understand that markets can go up and down, and your investment might not always grow immediately. The key is to invest only what you can afford to lose and to diversify your choices. By starting small, you're giving yourself a chance to experience the market's ups and downs without significant stress. This experience will be invaluable as you invest larger amounts in the future. Start investing, you'll need an account. Today, opening an investment account is easier than ever. Many online brokers and apps allow you to start with just $100 or even less. Look for platforms with low fees, user-friendly interfaces, and educational resources. Some popular options include brokerage accounts, robo-advisors, or even micro-investing apps. Take your time to compare features and choose one that fits your needs and comfort level. Setting up your account is the first real step toward becoming an investor. With your account ready, it's time to explore your investment choices. Even with $100, you have several options: stocks, exchange-traded funds, ETFs, mutual funds, or even fractional shares. Each option has its own risk and reward profile. Stocks offer ownership in companies, ETFs provide diversification, and mutual funds are managed by professionals. Fractional shares let you buy a piece of expensive stocks. Take time to research each option and decide what matches your goals and risk tolerance. Stocks represent ownership in a company. When you buy a stock, you own a small part of that business. Stocks can be volatile, meaning their prices can rise and fall quickly. However, over the long term, stocks have historically provided strong returns. With $100, you can buy shares of affordable companies or use fractional shares to invest in big names. Understanding how stocks work is a key part of building your investment knowledge. ETFs, or exchange-traded funds, are investment funds that hold a collection of stocks or other assets. They trade on the stock market like regular stocks, but offer instant diversification because you're investing in many companies at once. ETFs are popular for beginners because they spread out risk and often have lower fees than mutual funds. With $100, you can easily buy shares of an ETF and start building a diversified portfolio. Mutual funds pool money from many investors to buy a variety of stocks, bonds, or other assets. They are managed by professionals who make investment decisions on your behalf. Mutual funds can be a good choice if you prefer a hands-off approach. Some funds have minimum investments, but many now allow you to start with $100 or less. It's important to check fees and understand the fund's strategy before investing. Fractional shares let you buy a portion of a stock rather than a whole share. This is perfect for beginners with limited funds, as it allows you to invest in expensive companies like Apple or Amazon without needing hundreds of dollars. Many online brokers now offer fractional shares, making it easier than ever to diversify your portfolio with just $100. It's a great way to get started and learn how the market works. Robo-advisors are automated investment platforms that use algorithms to build and manage your portfolio. They're ideal for beginners who want a hands-off approach. With as little as $100, you can open an account, answer a few questions about your goals and risk tolerance, and let the robo-advisor do the rest. Fees are usually low, and you get the benefit of professional-level management without the high cost. Micro-investing apps make it easy to invest small amounts of money, even spare change from daily purchases. These apps round up your transactions and invest the difference automatically. With $100, you can get started and build your portfolio over time. Micro-investing is a simple way to develop good habits and see your money grow, even if you're starting small. Look for apps with low fees and educational resources. Diversification means spreading your money across different investments to reduce risk. Even with $100, you can diversify by buying ETFs or fractional shares of several companies. Don't put all your eggs in one basket. Diversification helps protect your portfolio from big losses if one investment doesn't perform well. It's a key principle for all investors, no matter how much you start with. Fees can eat into your investment returns, especially when you're starting with a small amount. Always check the fees charged by brokers, apps, or funds before you invest. Look for platforms with low or no commissions and be aware of management fees for funds or robo-advisors. Even small fees can add up over time, so it pays to be careful and compare your options. In choosing investments, it's often best to start with companies or industries you understand. If you're familiar with technology, retail, or healthcare, consider investing in those sectors. This makes it easier to follow news and trends, and you'll feel more confident in your decisions. As you gain experience, you can branch out into new areas and diversify even further. Automation is a powerful tool for new investors. Many platforms let you set up automatic deposits, so a portion of your paycheck or bank account is invested regularly. This helps you stay consistent and build your portfolio over time, even if you start with just $100. Automation removes the temptation to time the market and makes investing a habit. As your investments earn dividends or interest, reinvesting those earnings can accelerate your growth. Many platforms offer automatic reinvestment, so your money keeps working for you. Over time, this compounding effect can make a big difference, even if you started with just $100. Reinvesting is a simple way to maximize your returns and build wealth steadily. Keeping an eye on your investments helps you learn and stay motivated. Most platforms provide tools to track your portfolio's performance, see how your money is growing, and analyze your returns. Regularly reviewing your progress helps you spot trends, identify what's working, and make informed decisions about future investments. It's a key habit for successful investors. Investing can be emotional, especially when markets are volatile. It's easy to panic when prices drop or get greedy when they rise. The best investors stay calm and stick to their plan even during market swings. Avoid making decisions based on fear or excitement. Instead, focus on your long-term goals and trust the process. Emotional discipline is a key to investment success. The world of investing is always changing and there's always more to learn. Read books, watch videos, and follow trusted financial news sources. The more you know, the better decisions you'll make with your money. Start with the basics and gradually explore more advanced topics as your confidence grows. Learning is a lifelong journey for every investor. It's tempting to follow the latest investment trends or hot stock tips, but this approach is risky. What works for one person may not work for you, especially with a small amount like $100. Instead, focus on building a solid foundation and sticking to your plan. Avoid making impulsive decisions based on hype or rumors. Consistency and patience will serve you better in the long run. Your investment needs and goals may change over time. Make it a habit to review your portfolio regularly and adjust your strategy as needed. If you get a raise or save more money, consider increasing your investment amount. If your goals shift, update your plan accordingly. Flexibility is important for long-term success. Be wary of promises to double your money overnight or guaranteed returns. These are often scams or extremely risky investments. Real investing takes time, patience, and discipline. Stick to proven strategies and avoid shortcuts. Remember, if something sounds too good to be true, it probably is. Every step forward is progress, no matter how small. Celebrate your first investment, your first dividend, or your first portfolio milestone. Recognizing these achievements keeps you motivated and reinforces good habits. Investing is a journey, and every win counts toward your long-term success. Consistency is one of the most important factors in successful investing. Even if you can only invest $10 a month after your initial $100, keep going. Regular contributions, no matter how small, add up over time. Consistency helps you build wealth and take advantage of market growth through dollar-cost averaging. Investing can have tax implications even with small amounts. Learn about capital gains, dividends, and how your investments are taxed. Some accounts offer tax advantages like IRAs or Roth IRAs. Understanding taxes helps you keep more of your returns and avoid surprises at tax time. For investing, make sure you have an emergency fund. This is money set aside for unexpected expenses like medical bills or car repairs. An emergency fund protects you from having to sell investments at a loss if you need cash quickly. Aim for at least 3 to 6 months of living expenses in a safe, accessible account. It's not wise to borrow money or use credit cards to invest, especially when starting out. The interest on debt can quickly outweigh any gains from your investments. Focus on using money you already have, like your $100, and avoid taking on unnecessary risk. Investing should help you build wealth, not create financial stress. When you're just starting out, simplicity is your friend. Choose straightforward investments like ETFs or index funds and avoid complex products you don't understand. Simple strategies are easier to manage and less stressful. As you gain experience, you can explore more advanced options, but there's no rush. Focus on building a strong foundation first. Investing is a marathon, not a sprint. It takes time for your money to grow, especially when starting with $100. Don't get discouraged by slow progress or short-term market swings. Stay focused on your goals, keep learning, and trust the process. Patience is one of the most valuable traits for any investor. Starting with $100 might seem small, but it's a powerful first step toward financial independence. By setting clear goals, choosing the right account, and making smart decisions, you're building a foundation for future growth. Remember, every successful investor started somewhere. Take action today, keep learning, and watch your money work for you over time.